Had a great run with them for the next 5 years and grew the company from, kind of 110 million to closer to 500 million, and grew EBITDA to, about 100 and I think it's 125 million or something. In 2017, we did that. So this little company that, we started 14 years earlier and paid, $30 million for, we sold H.B. Fuller for just under 1.6 billion.
Tell us a little bit about how you went from shipping clerk to chief executive of business. That's not the typical. Who joins us on the podcast today with an operator turned into private equity investor, but also a shipping clerk that turned into a chief executive officer. Ted, if you could give us a 60 to 90 second breakdown of you, please.
Well, I'm a longtime business person. I started in 1973 as a shipping clerk, working at a factory that made sealants and adhesives. Worked my way up over the next 20 years to become CEO of that company. Then as CEO, expanded it to the point where it was sold then to PPG Industries. Shortly thereafter, I decided I wanted to try and do something different and developed a thesis to build a much larger adhesives and sealants company, found a private equity backer to support me, and did that for 14 years, and ultimately sold that company successfully to a public company called H.B. Fuller, traded on the New York Stock Exchange, and helped with the integration, and ultimately stayed on as the chief operating officer and ran the 3 global business units until I left about a year and a half ago to join Iron Path Capital as a partner, and been at Iron Path since then and currently.
Well, thank you very much. Short, brief history of what has been multiple careers in there, Ted. So plenty to unpack in that. So let's kick off with the growth of that business of raw adhesives and sealants. You developed your own thesis, as you mentioned. You then worked with Quad C to develop that. You sold to multiple private equity firms or recapped multiple private equity firms along the way. Give us a deep dive into that journey. There's a ton of people that would love to learn from your experience.
What I wanted to try and do, which was, I think, a little bit different at the time, is I wanted to, I wanted to use the experience that I had and the knowledge that I had to build a business, that was large enough that I wouldn't have to sort of start trying to invest $250,000 and buy some small business and try and build it up, right? So I wanted to match my capabilities with a business, and I wanted to do it on my own, and felt like the adhesives and sealants industry was fragmented enough where it was a really good opportunity to do a buy and build kind of strategy. So I spent about, 8 months really working on the thesis, and not just the thesis, but really the business plan, right down to, cataloging and evaluating all the potential sort of acquisition candidates, defining what a platform company should look like, really trying to understand, why this kind of a buildup would be successful, kind of looking at, the sort of the capital light nature of the industry, the generally consistent cash flows that are generated, the fact that a really well-run adhesives company should grow about twice as fast as GDP because of the change from mechanical fasteners into adhesives. So put all that together into a pitch, right? A business plan and a pitch. And then I went to, I think we mailed that to about 12 different private equity firms at the time. I also had the help of a local kind of buy-side banker here out in Southern California. His team helped pull us all together with me. And then I went out and pitched it, and surprisingly, I got quite a bit of interest. So we pitched it, including, having kind of the LLC agreement pulled together, all the monetary terms, what I was looking for, et cetera, and put it in a place where it could be diligenced, right? So, we know we were going to be dealing with private equity firms, the pitch was not going to get the deal right. They needed to be able to do, some real diligence, essentially on me and, my experience and career, to check out and challenge what I was saying about the fragmentation of the industry, the characteristics of the industry, et cetera. And we had really 3 PE firms really compete for the opportunity to back this. And at the time, I asked for support of about $100 million of equity. We thought that kind of equity could help us build a company of 350 million in sales and maybe 70 or 80 million in EBITDA, something like that. And so that's how it all started. It's really fortunate, found a really great firm in Quad C Management. The importance of the buy side support that I had at the time was actually to help me do my diligence on the private equity firms, right? So, getting advice about, just very simple things like how old's the fund, has the team had any, experience in the same industry that you've been in? Have they had previous portfolio companies that had invested in specialty chemicals, et cetera? I think one area that maybe often gets overlooked is what kind of chemistry do you have with the partners and the VPs and principals and associates, or the people in the firm, because you're really going to be working with them for 3 to 5 to 7 years, and in a pretty intense way, right? And so that was really important. So I got good advice there. Ultimately selected Quad C Management, and the way we looked at it, and the way I looked at this from the very beginning is I was not just an executive. I wanted to really be an investor operator, if you want to think about it that way, right? So I was just as interested in trying to really understand how private equity worked. What were the things that they were looking at in terms of risk mitigation. Buy and builds are a big responsibility in the sense that they can get bogged down if something goes wrong, right? So if you make your first 2 acquisitions and then something goes wrong, it stalls the progress, makes the investor, the PE group, a little less bullish on the idea of putting more time, money, and capital into the program, right? So there's all those kinds of things, really trying to go into this with, eyes wide open, really, having a view that, you've got to do 2 things with a buy and build, right? You've got to show that you can organically grow the things that you're buying, and you've got to show that you can improve them operationally, while at the same time, spending a lot of time looking at acquisition opportunities and then how they might fit strategically. And then the one other thing I would say is that I had a pretty careful view, but also one that was relatively easy to communicate, right? So I just had a simple graph on the thing that said, these are the markets that are really attractive for adhesives and sealants. So I had a number of markets, things like aerospace, defense, automotive, certain construction markets, et cetera. And then here are the technologies that are really important on the other side. Initially, I was really focused on North America, so I didn't really have any geographic components beyond that at that point. Ultimately, that did change. And then I tried to stay true to that, right? So that was the other thing, is the discipline to really follow the strategy when you're executing it, right? Because, there's always little shiny bells and whistles that show up as you're looking at acquisition opportunities, right? And so we eliminated stuff that we could have talked ourselves into, but we really wanted to stay true to the strategy itself. And so that's how it all started. It was it's a tough climb at the beginning because I was known in the industry, but we hadn't actually done any deals, and so the real challenge is the acquisition of the platform company. one thing I can tell you is that, you define what the perfect platform company is, and then you very quickly realize that there are no companies like that. So, you have to kind of get around the idea that you're going to look for like maybe, 70 or 80% of the characteristics that you've identified in your sort of ideal platform company. And if you can get somewhere near that, you have to start, right? So, and we did that when that was when we acquired Royal Adhesives in 2003, which was our platform company. At the time it was, 35 million in sales and 5 million in EBITDA. Much smaller than the platform company we were hoping to get, but a good platform company nonetheless. Nice facility, good labs, good team. And then over the next 5 years, we did 5 additional acquisitions, grew that to, it's kind of 110 million in sales and 15 million in EBITDA, and got to the point where it was time to trade some liquidity for Quad C. Put the company on the market, and before we really got it out of the starting blocks, we had the 2009 recession, Great Recession as they call it. Like most companies, we had about a 30% reduction in sales just the next year, and so we just went to work. We looked at a way to do some consolidation. We closed a plant, invested in our bigger plant in South Bend, moved that, and by the end of 2010, we had recovered completely from the recession. We're on track to do sort of 60 million of EBITDA and about 110 million in sales, but at much higher margins and profitability. And then we went through a process and recapitalized with Arsenal Capital. There's another really great firm. Had a lot of experience, especially chemicals. Had a couple of kind of operator partners like I'm doing now, which was so I got again I get to pick the first one. After that, it's you don't have complete control over what happens as a CEO of a private equity backed company. Have some influence, but not complete control. But Arsenal was the one we wanted. The thing was close, and so we all agreed we'd go with Arsenal. Had a great run with them for the next 5 years and grew the company from kind of 110 million to closer to 500 million. Did another 8 or 9 acquisitions during that period, and grew EBITDA to about 100 and I think it's 125 million or something like that. And then had the opportunity to recapitalize again with a third PE firm, which was American Securities, which is a really great PE firm. Also had a lot of experience in specialty chemicals, newer fund, so forth. And by that time we were supercharged with M&A, so we had we were actually closing deals as we were closing the sale to American Securities, and did another 4 deals right after that. And within 2.5 years, we were getting a lot of inbound interest from strategics, much larger adhesives and sealants companies, and we decided that it would be the time to sort of do that final kind of sale to a strategic buyer. And then in 2017 we did that. So this little company that we started 14 years earlier and paid $30 million for, we sold H.B. Fuller for just under 1.6 billion. And then by that time I was really invested in Royal, and I wanted to make sure that the team and everybody was well placed. So I stayed on. I was asked to stay on by H.B. Fuller and then help with the integration of Royal, which is a big deal. It was the largest acquisition in H.B. Fuller's history. We were about a third of the EBITDA. We increased their EBITDA by about a third. And so it was, a big important deal for the CEO, Jim Owens, at the time, and he wanted to make sure that it all went well and asked me to stay, which I did for a period of time, and then together we sort of came to the view that there was an opportunity to do some additional restructuring, and we reorganized the business from kind of 5 business units, 3 which were regional and 2 which were market-based, to 3 global market-based operating units, supporting about 30 global markets. And so I stayed on actually as COO and managed all that reorganization, and then led those 3 business units until everything was all stood up and in good shape. And then I retired at that point. So I don't know, it's probably a little bit more than you wanted to hear, but that's sort of the history, and it's why I have such a passion for kind of private equity, right? Because I say this a lot to people, is I think private equity, has helped democratize in many ways the ability for somebody who, is really good at something but doesn't have a lot of their own money, to partner with somebody to build something really great and interesting, and then create wealth for themselves. And it's hard work, but I mean, I can tell you, I made more money, in my private equity world than I did in the public company world I had before that and after. So it's an industry I'm very passionate about anyways.
Sorry to interrupt, just a quick mention of our long-standing partnership with Grata. As you will probably know, the private equity scene is constantly evolving, and deal flow is moving now to proprietary and data-driven processes. Grata provides you with the data and information of over 7 million private companies. So if you're looking to improve your proprietary deal flow and improve the data access, then reach out to Grata today. Now back to the podcast. Congratulations to you, Ted, for those achievements. One of the key areas of difficulty that we speak to a lot of private equity firms and portfolio companies is they can do the deals, identify the opportunities, and they can get the deal flow. But when it comes to integrating those businesses, it's not gone as well for those businesses. A lot of them still operate as single entities. A lot of them haven't got the same ERP systems, cultural alliances, etc., leadership teams. What advice would you share with chief executives, senior leaders of portfolio companies, but also private equity executives, to make sure they're getting that right and improving their processes around it?
I think you've got to be really intentional, right? So, and that's just not intentional around the process of integration. It's more intentional around the idea of, what is it you're really trying to build, and what kind of culture are you creating to be able to achieve that, right? So, in my case, going into it, understanding it was a buy and build, and, I had quite a bit of experience integrating, previous acquisitions at the companies that I've worked at before. The idea really was to, again, that's why that little matrix of, like, the markets you want to be in, the technologies, and, what kind of characteristics do you want to have? I mean, I walked around all the time telling people, look at, our company should be able to grow like twice GDP. So we really need to figure out how to do that, right? Our gross margin should be in excess of 35%, which means we're creating, and at least in our industry, we're creating value beyond just, some markup of the cost of manufacture. And, we should be shooting for EBITDA margins, 20% EBITDA margins, which would, suggest that, we're also getting the value, and that we're a well-run company. And then the fourth one is, we should really be striving to get working capital at about 15% or less of sales, which suggests that, we're, well-operated company, right? We collect our money, we pay our bills, and we manage inventory like really, really well, right? So, yeah, I always tried to make it kind of simple so that message could permeate down the organization. And then, as you're evaluating acquisitions, you really need to kind of, put the time and effort in to determine, like, what kind of cost synergies are you looking at? What kind of growth synergies are you looking at? And then how do you expect that you're going to get that? And then how do you take this acquired business and integrate them into your kind of culture, right? And I always thought, we tried to have, again, this really open culture with very clear, kind of simple approaches to what we were trying to accomplish. And, that transparency is great because, it's very clear pretty quickly, the people that you acquire, whether or not they're going to buy into this, to that approach. And if they're not, you see it pretty quickly, right? And so you can make changes pretty early on. And then I always took the time to try and understand the history of the businesses we were acquiring. And I think that's really important because at some point, somebody actually understood how to make money in those businesses, right? And so that core kind of added value activity was there. And sometimes, and many times it's still there. Hopefully it's always there, right? If it's really enduring. But a lot of times people forget it, right? They forget why they make money in the first place. And so, spending a lot of time on really trying to understand that. We go through, and this is a process that was really well done at American Securities when I was there. They do a process, what they call the shared vision process. And part of what happens is with a PE firm is, when you're looking at a target, you're doing the due diligence, you're looking at their materials, you're looking at all their data, you have some access to management, but not unfettered access to management. You have typically a banker that's involved in the process that's helping management, particularly in lower middle market, they're helping management really think through their strategy, right? So it may not even be management strategy if you think about it that way, right? It's something that they've kind of determined as part of the sales process. And then you make all kinds of assumptions and you've got your investor thesis that you do, and I won't say in a complete vacuum, but without the unfettered access to the management team. And it's really only after you close the deal that you have that unfettered access. And, that's when American Securities would do two things, right? They would sit down with the management team and say, look, we're going to send you all of our due diligence information, right? You're going to send you the market reports. We're going to send you the the accounting reports. We're going to send you the environmental reports. And we want you to take a look at them. We're going to show you our thesis. We're going to give you that. And we'll give you, a month to go through, work your way through those materials. And then we're all going to meet somewhere. And we're gonna sit in a room for 3 days and try and determine what our shared vision is, right? Do you agree with our thesis that we came up with? And a lot of times, you'd think they would because you're actually pulling it out of them in the management presentations. But again, it's not always as clear during that part of the process, given that it's you're negotiating a transaction. You're really not sitting and developing a real strategy and a real vision. And so anyways, that's that's what I tried to do at Royal. Probably not as with a much process as American Securities, but we would have just kind of Gantt chart organized integration plans, but we would ensure that we had every element of the company involved in the integration, and somebody was accountable for each one of those functions during the integration. And then we would, in the case of Royal, I personally led most of the integrations until we got, much larger, right? So it's, a little bit easier in that case because, I sort of had a strong view as to what we were trying to accomplish. But I think that's something that I really take as a best practice now, right? So, when we're working at Iron Path with firms, we're careful to make sure that after the deal closes, we spend time with them, on the strategy, the shared vision. Is everybody on board and rowing in the same direction? developing those relationships again, trying to understand, whether the culture that was there is the culture that we really want going forward, or is it culture that needs some adjustments, or is it just perfectly fine, right? So those are the kinds of things that I think are, for me, are, doing those things right up front, I think is a real risk mitigator from a investment thesis point of view, because you don't find out like 6 months later that, everybody disagreed with the thesis that you underwrote the investment on, right? So
what's something you've worked for, multiple private equity firms, you work in a private equity firm now, you've worked with them as a chief exec, you've worked with some pretty large ones which are well renowned in the US and internationally as well. What's something that you learned from them that you took from these, certainly the larger ones, your Arsenals and your American National Securities? What have you taken from those firms that you learned that you were like, wow, I'd take this into the business I'm running and would be valuable for others listening?
I mean, first, I guess everything I've learned about private equity, I learned from most of these firms, right? So it's like, that was my indoctrination into this world. But yeah, I mean, there's a lot of things, right? I mean, I'm just thinking about, Quad C originally were really known for like very rigorous, complete due diligence, right? I mean, the level of analytical rigor that you get, from a PE firm, sort of compared to being an operating company, right? Because there's all kinds of other stuff going on in an operating company, and your accounting person is trying to just sort of figure out how to get stuff done for the quarterly reports and this and that. Whether it's a public company or a small private company. So that was a real eye opener to me, right? And I really grew to appreciate, these really kind of, smart people that come to work, for PE firms, but not because they're smart, but because they work so hard. A lot of this stuff is like really, really, in the weeds, but having to be able to get in the weeds, get the data, and then kind of telescope it so that, you get to the big picture. And so that's a big thing that, that I learned, and I actually tried to kind of integrate some of that stuff, at Fuller when I went back into the public company world. In fact, we upgraded, spent a lot of time upgrading our M&A process as an example, and then really kind of revamping how we did diligence. And a lot of big public companies go to third parties for a lot of stuff, right? So and you get it, right. They might do a deal every once in a while, where we wanted to be able to do deals sort of as part of a growth strategy, right? So we'd have organic growth and inorganic growth, and kind of grow with a stream of deals, again, built around a strategy, kind of the Royal kind of M&A approach, and integrated that into Fuller. But it's not easy, right? Because people aren't trained the same way that they're trained in a PE firm. So that's one. I think I learned a lot from the governance side, right? So sitting on kind of PE boards, they're not as, there's not as much governance centric as a public company, but the principle's kind of the same, right? You're there to offer help and advice, but you're not there to run the company, right? So you're there to support the CEO and the team. And so there's this kind of coaching, she's sort of creating clarity, not being afraid to like get the issues on the table, but not providing the answers either, right? Trying to coach to get the answers. And again, kind of continuing this idea of a shared vision, right? Because things change, right? You may be doing just great with your current strategy, and then you have something like COVID, or the inflation, or this whole inflation thing, which by the way, I mean, I was around with the first, the inflation of the kind of late 70s and 80s. And, I started to recognize things that I thought were pretty clear, but then you realize that most people in companies up until this latest round of inflation never were involved in an inflated economy before, right? So, we had people that have, salespeople that had, careers of, long time that never really were involved in having to really, go out and increase prices as a result of, inflationary pressures and so forth. So, it's these are the kinds of things that, you kind of learn to, as part of the PE board governance to help people with context and with ideas and with clarity. But in the end, you're evaluating and you're looking at the management team's really the ones that got to make the decision and execute the plan. And, your job is to make sure that, they're capable of doing that. And so that's another thing I've taken away from them. I think, PE firms tend to be really great about staying focused on big issues, right? Not under so much pressure like a public company would be for every quarter, but able to kind of really, balance, kind of the short term versus kind of the medium and long term, assuming, things are going well and you're not running into issues with leverage and stuff like that, and bank covenants, which, that changes the dynamics quite a bit. But again, that's where the PE firms also come in, right? Because, their ability to really kind of know and understand, how to work with, the debt providers, and, and the fact that, again, the other thing I really like about private equity is, everybody's got skin in the game, right? So, when you're in a board meeting, you're in a board meeting with people that are invested essentially the same way as the management is and the limited partners are, which again, I think makes governance kind of, clearer and much more transparent.
Not only am I the host of the Private Equity Podcast, but I'm also the founder and managing partner of Raw Selection. Raw Selection is a private equity specialist executive search firm with two divisions, one that focuses on portfolio, C-suite executive hires, and one that focuses on private equity direct hires of your back office and investment deal professionals, operating across Europe and North America. A unique offering of our service is that we offer a full money-back guarantee on all upfront deposits. We typically take around $10,000 US as an upfront deposit to commence the search process. The remainder is then on completion, but that upfront deposit is completely refundable. If you're not happy with our service, we will refund that upfront deposit, no questions asked. Makes sense. Appreciate you sharing all of that, and there's certainly a lot that can be taken there on improving the roll-up process and acquisition and integration of businesses. So I know from research prior, Ted, you've written two books. One is, which you mentioned at the start, Shipping Clerk to CEO, which I'm assuming is your story, and then the second being Buy and Build CEO. So what inspired you to write a book? And tell us a little bit about how you went from shipping clerk to chief executive of business. That's not the typical route.
After sort of, completing my career and, becoming part of Fuller, and before I left, I was with some of the people at American Securities, and, one of them said to me, "Geez, you had really interesting career. You ought to write a book, right?" And for some reason that stuck with me. And I'd never done anything like it. And I started in a very undisciplined way, right? I just thought, well, I'll just write down kind of what I think happened and what was interesting. And along the journey, I started doing a lot of research. And one of the issues that was really kind of relevant to me was around you know, this kind of ceiling that was being created in business between college graduates and sort of high school graduates, or, you know, people that don't have a college degree, as an example. And and you know, my story goes back, you know, almost half a century, right? So it was a little bit different then. You could start at the bottom, and while it would be very advantageous to have a degree, I mean, you know, that was, you know, when I was just finishing high school, that was the early days where, you know, everybody should go to college and all that stuff, and I just didn't really want to, and I started working in this factory, and you know, I started to, you know, be really interested in, you know, I mean, I just sort of fell in love with, you know, manufacturing and operations and all that, and I just started to learn internally, and then I, you know, and I could tell that if I was doing a really good job, I'd get a chance to do another job, right? So it's really more kind of a step function, and 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 then I tried to always, like, you know, be friendly and meet people and ask questions, and I was, you know, kind of young and curious and all that, and so the book is really kind of around the idea that, you know, you can learn, you know, it's almost like, you know, you can learn in different ways, right? And some people learn by doing better than by studying, you know, and reading, you know. And so that was the whole idea, right? Is that in the book, I think, hit a nerve with, you know, lots of people that, you know, have ordered it. I've gotten feedback that, you know, I've given it to my kids, and, you know, a lot of kids now are challenging the idea, you know, should I go to college or not, right? And a lot of companies are challenging this idea. You hear it all the time. I read something in the Wall Street Journal, actually. I think it might have even been really early this morning after I woke up, about, you know, companies now thinking about recruiting directly from high schools, as an example, right? And you've got big companies, you know, that are rethinking, you know, at what level do I need to have you know, does somebody need to have a college degree? And a lot of it obviously come because of the, you know, labor shortages and so forth. But I think it's something where, you know, it's kind of overdue. I mean, at Fuller, we spent a lot of time developing programs where we could take people working in the plant and move them up into, you know, manager, supervisor, management positions. And, you know, at the company itself, they had driven the college degree thing down so low that, you know, you couldn't even be a supervisor without a college degree, right? And then you have all these really smart people that didn't go to college working in your factory that could very easily do those jobs, that get frustrated because they bring in people from the outside that actually don't have the hands-on experience managing those things. And so we turned it around and said, well, why don't we identify those people, and then let's help train them to become managers and supervisors, right? So that's a program we call Talent, or they call Talent Up now, where, you know, they're identifying talent early and then training them to go forward. So the whole idea of that book is that you know, I always tell people, you shouldn't think because you don't have something that you still can't aspire to do something, you know, bigger than what you're currently doing, right? And you know, I would say it's easy, and, you know, but that was my path, and it was a really interesting path, and it taught me how to network, taught me how to find mentors, taught me all these things that are so important for anybody, whether you have a college degree or not, in business. You know, it's, you know, again, going back to that, the one thing that I said, you know, about knowing, you know, you need to know, you know, everything about your business, right? Is you can't know enough about your business, is this whole idea about lifelong learning, and, you know, and really kind of, you know, being kind of, you know, sort of aspirational in your thinking. So I always try to get people to temper that by, you know, at each step, be aspirational about something that you can achieve, So don't say you want to be the CEO. Say you want to be you want to be the manager of the traffic department. At the company where you're currently a shipping clerk, right, or something like that, right? Step by step is, I think, a good way to think about how you build your career. Not everybody's going to go all the way to the top, but people can rise to their level, and they shouldn't be sort of, arbitrarily, cut off because of some, educational standard that's put in that may or may not be applicable, right? Now, there's lots of educational standards that are very applicable, right? You don't want to have your doctor that, hasn't, hasn't gone to medical school, or, but, even things like, 100 years ago, most lawyers didn't go to college, right? You would read the law, you'd work with a lawyer, you'd read the law, and that's how you became a lawyer. So I think a lot of this stuff needs to be challenged, a little bit more rigorously, right? As to, why do we put in restrictions sometimes when we probably don't need to?
It's quite an inspirational message for a lot of people out there who maybe didn't get the qualifications they needed or wanted in order to do what they wanted to do or thought they wanted to do, and could move on from there. So Ted,
Yeah.
what are your influences? What do you read? What do you watch? What do you listen to that you'd recommend that others check out?
Yeah, so I don't know, for the last 20 years, I read more history than than anything else, right? So I don't read as many business books like I probably did 30 years ago. But right now I'm just reading right now a book by Walter Isaacson called The Code Breaker, which is it's about gene editing, and there's just the science behind more of the kind of the practical implications of all this genetic stuff that's gone on, and how they you can use certain things to cut and cleave the molecules, and all the kinds of things that led to, as an example, the COVID vaccine, right? So that's really interesting. And somebody gave me Elon Musk's book to read. I haven't started it yet, but I have that. I do like, I've been doing podcasts. I walk every day, and I've been listening to these podcasts. Like there's the one that I like right now is Business Wars, which is just a kind of high level, but it's by Wonderies. It's really interesting. They'll pick like the competition between like Southwest and American Airlines, or Hilton and Marriott, or whatever it might be, and it's really really light listening and interesting stories, right? And many times, by the way, a lot of these firms, even before PE was a thing, 80, 90 years ago, people were using private capital to start these businesses, and build them. So that's one. Another one called American Scandal, which is interesting. I like the American Scandal is good because you learn about leadership from the negative side, right? Because they talk about people that are, have done horrible things, but it kind of tells you like what not to do, right? Now they do a lot of American Scandals. There's a lot of episodes around businesses, government, and et cetera. So for me, that's a good one as well.
Well, appreciate you sharing all of that. Ted, if anybody wishes to reach out, how best do they get in touch with you, please?
Yeah, so the easiest way is actually go to tedclarkeauthor.com, and there's a little place in there you can send messages and so forth. So that's good, or just tedc@ironpathcapital.com. So those are the two best ways.
Perfect. We'll put that all in the show notes. Well, Ted, thank you very much for joining us. Appreciate your insight in operator turned private equity investor, shipping clerk turned CEO, which I don't think I've said on the podcast as of yet. So congratulations for that. And thank you very much for sharing all of your insights today.
My pleasure. Thank you for having me, Alex.
And as always, thank you very much for everybody joining us and listening in. Should you ever need support with the private equity hiring or portfolio executives across Europe or North America, please do reach out to us at Raw Selection. If you haven't already done so, please subscribe to the podcast and you'll be notified of the next podcast exactly when it comes out. But till the next time, keep smashing it. And thank you very much for listening.